And I know times like this, you just take it slow. I fall asleep in the pillows. She got my heart in a chokehold. And there she goes.
Assalamu alaikum. Hello everyone. This is Liquidity Club by Ahmed Shawi. Today is Sunday, the 22nd of October 2023. I'll be doing the weekly market review. So let's get started. Starting with the DXY, here we have the weekly chart. As you can see, last week was an inside candle here. Price didn't take the previous week's high or previous week's low. So we were inside the range of last week's trading, which means smart money are now accumulating more liquidity, which will be allowing them to move higher towards the buy side liquidity and with consequent encroachment. So I'm still expecting price to reach up higher to this buy side liquidity and to the with consequent encroachment. And if it was really animated to the upside, I'll be looking at the buy side liquidity. Going to the daily chart, as you can see, we were trading inside this range from this high to this low. So we were consolidating basically as I was anticipating last week review. So if you refer back to the last week review, you can know how that I mentioned that we will be expecting some kind of consolidation in the marketplace, and we've seen that this week in the XY. So price has consolidated here and has respected the fair value gap. You can see the lows are being respected here. That's a signature. We have a bit of coloring outside the lines here on Thursday, but nevertheless, we were just trading inside this fair value gap. So this is kind of giving me a signature that we were working inside the internal range liquidity, and now we're likely to reach to the external range liquidity, to this buy side liquidity, which is also an internal range liquidity, which is from this high to this low, this is the dealing range, and to the buy side liquidity, which is an external range liquidity, and to the buy side liquidity that's just above it, which is the wick consequent encouragement. So this is what I'm expecting in the marketplace. Since we're also swept the sell side liquidity that would be resting below these two equal lows. We swept that on Thursday, and then we started trading, retracing from there. So next week I'll be looking to take out these relative equal highs. There's pretty much nothing to look at the downside. We took the sell side liquidity here, we run up higher, created a fair value gap, and now it has made that fair value gap efficient by trading inside of it. A bit of a coloring outside the lines here, but that's what we expect in sometimes in very sensitive geopolitical events that are happening around the world. And then we still kept trading inside this range or this fair value gap. Next week, the areas that are still intact and people who are the retail who have their stop loss are most likely going to be having their stop loss above these two highs, this buy side liquidity and the external range liquidity. And there's also going to be more liquidity at the wick consequent encroachment. So I've just outlined what I'm expecting for the XY next week. I'm expecting higher prices. So that was pretty much it for the XY. Moving on to ES, we're viewing here the December's contract. This is the weekly chart. As you can see, last week we have a strong down close candle reaching or was trying to reach to the sell side liquidity, and which also aligns up with this wick consequent encroachment of this candle's premium discount wick. So I'm expecting price to treat the weekly consequent encroachment of this discount wick as resistance, that which will lead price to trade up, trade to these levels, to the sell side liquidity, which is the wick consequent encroachment of this discount wick and the sell side liquidity. It's also worth mentioning that I'm expecting price to gap lower on Sunday or today. Why? Because we closed very close to the low. I've taken positions in ES and I was aiming at that low as my terminus. But unfortunately, we didn't get that. So as I'm trying to preserve my capital and I'm trying to prevent the gap risk that's going to be accompanied with holding the position over the weekend, I've closed my positions there, but I'm sure that we will be looking to see price trade to this low as the sell side liquidity, which will be sell stops residing below this low. So we closed below the weekly consequent encroachment. The consequent encroachment can now be treated as resistance, which will drive price lower towards this sell side liquidity and to the other sell side liquidity that I've mentioned. The weak consequent encroachment, these two levels, and the sell side liquidity. Going to the daily chart, as you can see, the same thing. However, I'm expecting this can be kind of retracement to to this fair value gap. You can see that everything's efficient from here, from this high. The fair value gap, there is no fair value gap here. Price has retraced up higher to the low. We have an immediate rebalance, broke lower, also to the bearish order block here, and then traded lower. The next candle, it didn't trade to the low of this candle, so we have a fair value gap here. Price can retrace to it, accumulate more orders, make this area efficient, and then continue going lower. But since we're very close to the sell side liquidity, I'm expecting price to trade to the sell side liquidity first, and then from there we'll see and monitor how price trades. So my main objective is the sell side liquidity right there. I'm expecting price to draw to that level next week, and potentially it can do that with gapping lower on Sunday, which is today. So that was pretty much it for ES. Going to NQ, here we're viewing the continuous contract on the weekly chart. As you can see, last week we have a big down close candle towards the downside. We were very close from reaching to the sell side liquidity and to the weekly fair value gap, and we closed below the wick consequent encroachment of this long discount wick. I'm expecting the low of the wick consequent encroachment to be treated as resistance. We might form a fair value gap as a result and trade to the sell side liquidity and to the levels that are of the weekly fair value gap. We have the low of this candle, the high of this candle, which are the low and the high of the fair value gap. We have the consequent encroachment of this fair value gap and the two quadrants, which are the 25 and the 75% levels. These levels that I've highlighted or just mentioned are important for you to be taking some profits or booking some profits at if you're looking to write some shorts from there. So going to the daily chart, as you can see, we have a fair value gap. The same thing is mentioned here as we've mentioned on the ES. Price has made all of this area efficient. Basically, it has made this fair value gap efficient and traded lower. The only fair value gap that price can retrace to it to make it efficient is this fair value gap. We can retrace to make this fair value gap efficient and we can resume going lower. Or it can leave this. What I'm favoring is price leaving this fair value gap untapped or unfilled, and it will be treated as a breakaway gap. Price can tap it as an institutional order flow entry drill, but I don't want to see price completely fill it. So this will be treated as a breakaway gap. And then trade lower to the sell side liquidity and to the levels of the weekly fair value gap. On the daily, it doesn't look like it's a fair value gap because I'm including these areas here, but it's a weekly fair value gap that is nested down to the daily time frame. So yeah, the levels that I've mentioned on the daily chart, on the weekly chart, the 5 levels of the fair value gap, and the equal lows here, what I'm expecting price to draw to next week. So that was pretty much it for NQ. Going to Dow, here we're viewing the continuous contract and we're viewing the weekly time frame or the weekly chart. As you can see, last week we took the buy side liquidity of the previous week's trading and we took the low. So we first traded up higher, took the buy side liquidity, and then we traded lower, took the sell side liquidity. I'm expecting price to trade towards the sell side liquidity here, and these to the sell side liquidity here, and the wick consequent alternate of this discount wick, which comes at these levels right there. I'm also expecting the wick consequent encroachment to be treated as resistance as we trade higher. You can see that the wick consequent encroachment approximately aligns up with the low of this candle, which will be resulting in an immediate rebalance if we trade back to it. So if we trade back to it, we will not be having any potential fair value gap forming. As you can see, when compared to the NQ, we have an area here, and the wick consequent encroachment is basically will leave a bit of a gap here unfulfilled. The same thing is mentioned here on the Yes, the same thing can be said if price retraces back to the weekly consequent of this discount wick. Price can leave a bit of a gap unfilled or untapped. However, for Dow, it will make it efficient, and it will result in an immediately balance, which will be a strong algorithmic signature on price that will be pushing price even stronger to the downside towards this sell side liquidity and the other sell side liquidity. So I think that's pretty much it for the weekly. Dropping to the daily, a lot of things here are happening on this chart, so I'm gonna be going with you and I'm gonna be showing you what I'm expecting. As you can see, starting from here, we have the buy side liquidity. We swept that right there, a bit of a retracement, and then we continued and took this high again one more time. We broke this high this week, last week. As you can see on Thursday, we broke that low. We created a bearish breaker. We have a high here, low, higher high, and now lower low. So high, low, higher high, lower low. We have a bearish breaker, this candle right there, or you could be considering it this candle because it has the lowest close. And we have also inside that bearish breaker, you could be considering this low or this low, but I'm favoring this low right there. And we have a fair value gap. What are these two? When these two PD arrays aligns with each other's, what is this? It is the unicorn. It's one of the strongest algorithmic price action entries that could be used or utilized. And it's showing itself here on the higher time frame. So the unicorn is not just something that is just for the lower time frame, or you just can see it on the lower time frame. I've been trading unicorns on the higher time frame as well as on the lower time frame. So I've been swinging the unicorn, I've been doing short-term trades with the unicorn model and a lot of things. We have a fair value gap here. Price, I'm expecting price to retrace back up. We have a fair value gap, we have a bearish breaker, price can tap into these and then continue going lower even further than this inside liquidity, reaching to these levels right there on the weekly time frame. So this is gonna be like a low hanging fruit right there. This is liquidity after we reach to the fair value gap. We have an implied fair value gap, which is from the consequent encroachment of this wick to the consequent encroachment of this wick. It's a bit of more of advanced fair value gap, but I'm gonna be attaching it here so we can see some reaction at these levels right there at the implied fair value gap. But we can see some reaction there. Price can tap into these levels that I mentioned that I'm expecting, and we can trade lower to the sell side liquidity. That's what I'm expecting. It's not a trading signal for you to go and take this short. It's for you to study it and to get the experience from it moving and study how it moves. So I think that's what's pretty much it for Dow. Going to Euro USD, also known as the fiber. Here reviewing the weekly time frame chart. As you can see last week, it's basically an inside candle. We didn't take the high, no, we didn't take the low. So we're basically consolidating inside the last week's trading. And at the same time, which means when we're consolidating, we're accumulating more orders. At the same time, we're respecting, if you go to your chart, this is as an assignment to you. Go to your charts and you measure the consequent encroachment of this premium wick. You see that price has stopped at the consequent encroachment of this premium wick consequent encroachment. It stopped there, it respected it, it filled the fair value gap one more time, it revisited it, and then it stopped there and it closed for the day, for the week. I'm expecting next week to be looking for lower prices. Let's say the weekly consequent encroachment to be jamming through it, treating it as resistance, and to reach to the sell side liquidity right there. There are more levels that are below this. If you refer back to the last week's trading or last week's review, you can see that I've attached the other lower draw liquidity objectives that I'm looking at or expecting from price. So going to the daily chart, as you can see, we're trading inside the range from this high to this low. This is Friday's trading, so we have Monday, Tuesday, Wednesday, Thursday, and Friday. We've been trading inside that range from last week high to last week low. That's the range, and we've been trading inside of it. We had a fair value gap here. we are not seeing the precision that I want to see in price. Price has closed above the fair value gap, and next week it has traded up higher. It's not showing me that it's a high probability on the daily. However, on the weekly, I'm expecting lower prices, but when you look at it on the daily, it's looking like it's indecisive. So I can frame both sides of the marketplace. I could be forming, or I could be expecting higher prices as well. I can be expecting lower prices. So, which means I'm gonna be sitting on my hands and to see if we want to break this low. Once we break that low, this is gonna be a bearish breaker. If we have a very gap, this also can be influential, which will send price lower to the sell side liquidity, which we have like relative equal lows here, and to the sell side liquidity. Otherwise, I'm gonna be sitting on my hands. Price can peak above this high one more time. It's expected from price to accumulate more orders at the bearish order block right there. So I think that's pretty much it for the Euro USD. Going to Pound USD, also known as the cable. Here reviewing the weekly time frame chart. As you can see, last week we actually took the low here, and we've been tapping inside or tapping into the weekly consequent encroachment. If you go to your chart and measure the consequent encroachment of this discount wick, you will see that it's also aligning with the wick consequent encroachment of this discount wick, and it's also the weekly fair value gap low. So we have the influence of three levels, also the low of this candle. So there's a strong influence at this level right there, which is approximately the low of this fair value gap. If you go to your chart, this candle's high right there, this is the weekly chart. This candle's high is influential for me. I want to see price close below it and treat it as resistance, which will be telling me that I'm expecting lower prices to this sell side liquidity and to the wick consequent encroachment right there. If we were really animated to the downside, I'm expecting price to trade towards this low or this sell side liquidity. Going to the daily chart, as you can see, we've been consolidating as I was expecting last week. We have a fair value gap now. Comparing this fair value gap to Euro USD, you can see that Euro USD is working inside of it and it's basically running up higher, whereas Pound USD is actually trading lower and it hasn't touched this fair value gap yet or at all. It tried to do that here on Monday, Tuesday, but it failed, and then Wednesday, Thursday, and Friday it gave up the ghost and started trading lower, taking out this low. It's also worthwhile mentioning that I'm expecting price to trade lower below this the weekly fair value gap low and closing on the daily time frame. So on the daily time frame, I'm expecting or I'm looking for a closing. I'm looking for price to close below the weekly fair value gap low. So I'm looking for price to close below this low or the weekly fair value gap low and treating it right there as resistance, which will send price towards the sell side liquidity. I'm not expecting price to trade and close below the weekly fair value gap on the weekly time frame. It's on the daily time frame. So nothing is ambiguous here. I'm sharing a very clear points on what I'm expecting price to do in the future. It's either gonna be this or that. I'm also expecting price can be retracing and working inside this fair value gap to accumulate more orders and to take a bunch of buy side liquidity that's been accumulated here. And as you can see, we formed the low here, lower low. USD we formed the low, higher low. So this was telling me like we're not having the symmetry in price between the closely correlated markets, and which will lead to a bit of low probability conditions in the forex market. So I think that's pretty much it. I'm also expecting lower prices here and on the pound. As I've mentioned, I want to see price close below the weekly fair value gap and treat it on the daily and treat it as resistance, which will lead to lower prices. That's pretty much it. So that was pretty much it for this weekly review. I hope you gleaned something useful from it and important. And until I talk to you next time, be safe. Assalamu alaikum warahmatullahi ta'ala wa barakatuh.